So, what do you know about market geometry? Let's go deeper. All right, let's jump right in. So there's a lot of different kind of definitions of market geometry out there, and some people try to go real deep with it, with like, spiritual geometry and ancient geometry, and there's a lot of stuff out there. I don't know. What I do know is that the market moves certain ways. I know that the market moves in a certain pattern. I don't know the market moves in twos. And with that, what I wanted to show today is that there is something that's a little bit of geometry that happens in the market that can help you take better trades. And what that is it's what I've learned, or not learned, but what I've heard it's called is a measured move. So it has another name too, but I can't remember. But measured move is the main move. And so the market moves in twos, okay? Always remember that. The market moves in twos. It's called the rule of two. Here's one move right here. From this bottom to this top, that's a move. Let me give you another move. From this bottom to this top, that's move two. Market moves in twos. 1, 2. Also, you're going to get 2 back. Look, 1, 2. All right, there you go. I can stop the lesson right there today. The market moves in twos. Very important. Now, let's go back. What you will find if you do your own research is that when you get this first leg right here, we call this a leg. Oops. I'm messing all up. I don't know what that is. All right. So when you get this first leg, I done switched. This is my first time using this. Sorry. I done switched to something. I don't know what I'm on right now. Let me get back to text. Text, please. Text, please. Text, please. Where was I at? I done messed all up. Am I back on text? Oh, it wants to type text. Oh, I see what I did wrong. Up here to get back to brushes. All right, this is one. This is leg one. This is leg one. Sorry. What you'll find, all right, is that the concept behind a measured move is that when you get a really strong move in the market, you'll get a pullback, and then you'll get another measured move about the same distance. Now I don't have a way to measure this, but from here to here is one measurement. So when you see a leg like this, then you get like for instance, this is we can call this a first entry, second entry long right here. When you go in to take that second entry long, you're taking it with the confidence that you're going to get another leg. You're going to get another leg of this distance. So when you take the second entry long that probably happened in the center of the pattern, what you're really hoping and expecting is that we're going to get another leg. So boom, right there. So from here to here is normally the same distance. It's normally exactly the same, comes up a little short or overshoots it. But that's what you're counting on. You're counting that the market is going to move the same distance that it did from here to here, from here to here on the second leg. That's it. That's a measured move. And they're accurate. I mean, nothing is 100% in trading. We all know that, but these measured moves are pretty accurate. I mean, if you see a big run up and then you see a nice pullback, gives you a second entry long, or in reverse, a second entry short, hey, that's why we take that trade, because we understand that the market moves in twos. First of all, we understand the rule of two, and then we understand that you could possibly get a measured move. So if it's a very strong move and you get a entry, what you're expecting is for the market to move here. This is how you pick targets. So we don't have to pick targets in binary options, but if you're in Forex or trading crypto, this is how you pick your target. Once you enter here, you measure this first leg, and your stop loss goes at the top or a little bit before. Your stop loss, if I was trying to catch this leg here, my stop loss is going to be about here. Target. Even though I'm expecting it to come here, I'm going to get out about here before everybody starts taking their profits. And so that's how you set targets in the market. There you go, Forex people. I'm always taking care of y'all. So yeah. So market geometry, to me, in my opinion, is nothing but understanding the rule of two. And with that, understanding that when the market moves, a lot of times you'll get a measured leg. So if you get one leg this distance, you kind of get a pullback. The next run up will probably be about the same distance. So start looking for it. I mean, this is something that you can test easily by just looking at charts. Easy to back test. Really just by just looking at charts though. If you just eyeball enough charts, you'll start to spot the rule of two. You'll start to spot measured legs. And when you do, that may really open up the possibilities of certain trades. So that's the lesson for today. Measured moves. Look for them, use them to your advantage. All right. So as usual, I thank you for staying to the end. I appreciate you guys. Please like, subscribe, and share. And for hanging in there and listening to me again, I got a trade for you. So we're going to do a trade example. And again, I thank you guys for watching. Let's jump. So all the New Zealand is looking about ready now. Now we got a high, push down, lower high. We haven't been able to break higher at all. We have a trend up, 1, 2 leg back, 2 up. We're headed lower. Let's go. 10 minutes. We're in 10 minutes, expecting that we're going to be coming to test the low here, here, and here.
We would like to thank you for tuning in to another Increase episode with JD. If you want to learn how to price action trade, please visit www.jdhyder.com and you will find his brand new course, IOTS, Price Action Trading System. We thank you again, and as always, we wish you increase on the sudden.